Welcome to a short educational brief brought to you by Flexible Benefit Service Corporation. Today's educational brief will focus on a new type of HRA referred to as a Qualified Small Employer HRA. Now, on December 13, 2016, President Obama signed into law what's referred to as the 21st Century Cures Act. While the law primarily focuses on medical research and advancing healthcare innovations, it also created a new type of HRA for small employers. And this type of HRA will be available for plan years beginning on or after January 1st, 2017. Within the context of the law, this type of HRA is being formally referred to as a Qualified Small Employer HRA. This is an employer-funded reimbursement account that can be offered by eligible small employers. With this type of HRA, reimbursements of any Code Section 213D medical expense are permitted, including the reimbursement of individual health insurance premiums for plans purchased on or off the exchange. Now, in order to be an eligible small employer, two requirements must be satisfied. First, the employer must not be subject to the employer mandate. In other words, they must have fewer than 50 full-time equivalent employees. And second, the employer must not offer a group health plan to any of its employees. It's important to emphasize that both of these requirements must be satisfied in order to be considered an eligible small employer. In terms of employees, all employees must be offered access to the Qualified Small Employer HRA with certain exceptions. Those exceptions being employees who have less than 90 days of service, employees under the age of 25, part-time and seasonal employees, employees subject to a collective bargaining agreement that covers health benefits. This will generally be your union employees, as well as certain non-resident alien employees. Now, the reimbursement limits are capped by the federal government. The maximum reimbursement under a Qualified Small Employer HRA for single coverage starts at $4,950 per year, and for family coverage starts at $10,000 per year. These limits will be indexed for inflation for future years, and employers can set lower thresholds if they choose. It's important to point out that the limits must be prorated on a monthly basis for employees who are not covered under this type of HRA for the entire plan year. In terms of plan design, a Qualified Small Employer HRA must be offered on the same terms to all eligible employees with two exceptions. Those exceptions being that reimbursement limits can vary based on age and or family size, which are two of the primary components driving individual health insurance premiums. As it relates to reimbursements through a Qualified Small Employer HRA, those reimbursements are generally going to be tax-free for qualified medical expenses. However, if the employee or their covered family members do not have minimum essential coverage, those reimbursements will be taxable. Also, as it relates to reimbursements, in order to reimburse a premium expense, the employee must submit proof of payment in order to authorize that reimbursement. As it relates to a Qualified Small Employer HRA and its interaction with exchange subsidies, those subsidies are going to be impacted in the form of being eliminated or reduced by access to the HRA. Those subsidies are going to be eliminated if the HRA causes coverage to become affordable. And coverage will be considered affordable if the insurance premium for the second lowest cost silver plan, after taking into account the available HRA reimbursement, makes that premium expense less than or equal to 9.69% of the employee's household income. If after taking into account the HRA reimbursement, that premium expense is still considered unaffordable, meaning it's greater than 9.69% of the employee's household income, then the HRA is going to reduce access to the subsidy by the amount available through the HRA. Now, there are some special rules for these HRAs. The first being that a written statement must be provided to employees, which indicates the amount available through the HRA. It must indicate that the statement has to be provided to the exchange when applying for a subsidy, and it also must indicate that reimbursements are taxable if not covered by minimum essential coverage. Another special rule is that these HRAs are going to be subject to Form W-2 reporting of the permitted benefit. The permitted benefit is going to be defined as the maximum benefit that can be reimbursed under the HRA. Now, because this is a new Form W-2 reporting requirement, we do expect those W-2 reporting instructions to be updated at some point next year. Another interesting factor or special rule for these HRAs is that Cobra and other continuation coverage rules will not apply. Now, this is a new law that was issued by Congress and enacted by President Obama. So we do expect that additional guidance will be forthcoming since these qualified small employer HRAs are brand new. So we do anticipate that the IRS and/or other agencies will issue some further guidance as they interpret and define this new law. So stay tuned for more information about that. Now at Flex, we are excited that small employers do now have another option to help employees secure insurance coverage. At Flex, we are able to administer qualified small employer HRAs on behalf of your small employer clients, and we do continue to offer and administer other types of HRAs, including integrated HRAs, retiree HRAs, and standalone dental vision HRAs. If you do have questions about the new qualified small employer HRA, please give us a call at 866-472-0886. If you do have questions for our general agency division, please give us a call at 866-353-9178 or visit us at our website, www.flexiblebenefit.com. Thank you very much for your time and have a great day.